All right, let's jump right in. Today, we're looking at two really fascinating stories playing out in the world of finance. On one hand, you've got a market that's kind of hitting the brakes, and on the other, a platform that is just slamming on the accelerator. Now, they might seem totally unrelated, but trust me, when you put them together, they tell us a ton about where money and tech are headed.
So Bitcoin and sports bets. What on earth is the connection there, right? It sounds like a weird setup, but I promise, by the time we're done here, it's all going to make perfect sense. It really all boils down to risk, innovation, and this huge, insatiable appetite for new ways to invest your money.
So here's how we're going to break it down. We'll kick things off with our tale of two markets. Then we'll get into the nitty-gritty of what happened with the Bitcoin ETFs. After that, we're going to look at the insane growth of a company called Kalshi. And finally, we'll tie it all together and see what it tells us about this new financial frontier we're all living in.
Okay, so the core of our story today is this wild contrast. We're essentially taking two snapshots from the exact same week in finance. One shows a market that's, growing up and dealing with some volatility. The other shows a total disruptor right in the middle of this massive, explosive surge. You really need to understand both to get the full picture of what's happening right now. So let's start with story number one. For weeks, Bitcoin ETFs were the absolute talk of the town. I mean, they were pulling in huge amounts of cash and just looked completely unstoppable. And then, poof, almost overnight, the music just stopped.
And to really get the scale of this, you just have to look at the number. Over 9 straight days, more than $5 billion flooded into these things. That was a huge signal of confidence from the big institutional players, the so-called smart money, finally getting comfortable with crypto. The momentum felt like it would never end.
And then, this happened. On October 10th, that incredible streak was broken. Now look, it wasn't a total catastrophe, but for the first time in 9 days, more money was heading for the exits than was coming in. It's a pretty stark reversal, and it just goes to show you how fast the mood can change in these new markets.
So you gotta ask, right? What does this actually mean? Was this just a tiny speed bump after an incredible run? Or was it maybe a warning sign that some of those big institutional players were starting to get cold feet?
Well, here's where it gets interesting. When you dig into the actual numbers, the picture is way more complicated. It wasn't some simple across-the-board sell-off. Nope. While some funds like Bitwise and Grayscale saw money leave, BlackRock's IBIT, one of the absolute giants, actually saw another $74 million come in. This tells you that different investors were making totally different bets.
So what was the trigger? It looks like it was an 8% dip in Bitcoin's price. Now, if you're an investor sitting on huge gains from that 9-day hot streak, a drop like that is a pretty clear signal to cash in and take some profits off the table. But for others, maybe those with a longer-term view, that same dip looks like a fantastic buying opportunity. See, this isn't panic. This is what a maturing market looks like. Different people, different strategies, all playing out at once.
Okay, so now let's pivot to our second story. Because while the Bitcoin ETFs were dealing with all that volatility, a totally different kind of platform was experiencing pure, unadulterated, explosive growth. Everybody meet Kalshi, a US-regulated prediction market that is quickly turning into a financial heavyweight. Before we go any further, what in the world is a prediction market? It's pretty cool, actually. Just think of it like a stock market, but for events. So instead of buying a share of, say, Apple, you buy a contract that pays out if a specific thing happens, like who's going to win the next election, or if a new movie will smash box office records. You can even bet on the outcome of sports games. Now, just get a load of Kalshi's momentum. First off, the company just locked down $300 million in new funding. And look, this isn't just some early seed money. This is serious, big league capital that screams major investor confidence. And that funding round, it shot Kalshi's valuation up to $5 billion. That's more than double what it was worth just a few months ago. The growth curve here is basically a straight line pointing up. And this isn't just hype. This growth is real. Kalshi now handles over 60% of all global activity in prediction markets. They've blown past their rivals and are now the dominant player in a sector that's just exploding. And just look at who's writing the checks. We are talking about the biggest, most respected names in venture capital. You've got Sequoia, the folks who backed Apple and Google, Andreessen Horowitz, who got in early on Facebook and Airbnb. When these firms put their money down, it's because they think they're looking at the next massive disruption in tech and finance. But when you cause that much disruption, you're going to get a lot of scrutiny. And Kalshi's CEO, Tarek Mansour, he isn't running from it. He actually frames all the tough questions they're getting from regulators not as a problem, but as proof that they're doing something truly new and important. And that right there is the big issue. As Kalshi pushes into super regulated areas like sports betting and makes plans to go global in over 140 countries, they are on a direct collision course with the old rulebook. Their biggest challenge isn't another company. It's trying to navigate a legal landscape that just wasn't built for this kind of thing.
Okay, so let's tie this all together. On one side, we've got the Bitcoin ETF market, which is showing some growing pains, signs of maturity and caution. On the other, you've got the Kalshi prediction market, which is all about explosive, disruptive growth. So, what's the real connection here?
Think of it like this. Bitcoin ETFs. That was the wild frontier just a few years ago. Now it's being settled by institutional money. That profit taking we saw, that's not a sign of failure. It's just the normal growing pains of a market becoming mainstream. And Kalshi? Well, Kalshi represents the next frontier. It's where all that risk-taking money is flowing now, chasing that same kind of explosive growth before all the rules get written. So you see, they're not two separate stories. They're just two different points on the same timeline of how wild ideas become serious investments. So when you boil it all down, here's what you get. The hunt for the next big thing, for those huge returns, it never, ever stops. Capital is always on the move, looking for that next high-growth opportunity. And these two stories perfectly show us the life cycle of that hunt, from that initial wild gold rush phase to a more cautious, calculated stage of development. And all along the way, you're constantly battling volatility and regulation. Which leaves us with one last fascinating question. The story of Bitcoin ETFs and the story of Kalshi, they kind of give us the playbook for financial disruption, but they also prove that the path is never, ever a straight line. So as we look out at the horizon for the next big thing, you have to wonder, will it be a steady, mature climb like the ETFs are starting to have? Or is it going to be the explosive, uncertain, and maybe even more exciting ride that Kalshi is on right now?